Hi, welcome back. Today it's Tuesday, June 30th, and the market's trying to extend yesterday's rally, but once again, the strength is not equally distributed. I'm doing this about an hour before close, so some of the prices and percentages could change. But with about an hour left in the normal trading session, the NASDAQ is leading, tech is leading, semiconductors are strong, but a lot of the market under the surface is much weaker. So this is not a clean everything is ripping day. It's more of a concentrated growth and AI led move, while defensives, healthcare, real estate, and parts of software are still struggling. So let's jump through the indices, sectors, a few stock stories, the trade check ins, the weather report, and most importantly, the macro data coming up for the rest of this very big week. And you can skip ahead at the chapters below if there's just one particular thing you'd like to see. And quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market and managing my own portfolio and thinking through trade architecture. Please hit subscribe to follow for more. I really, really appreciate it. If you're new here, I do videos every day. And on the weekends, I do some trade deep dives and technical deep dives. And thank you so much to everybody who's subscribed. I really appreciate it. First off, let's start with the macro backdrop from today because this is really important. And today we got JOLTS, job openings, consumer confidence, and Chicago PMI. And the big one was JOLTS. Job openings came in hotter than expected, rising to around 7.6 million. And that tells the market that the labor market is still more resilient than expected. Consumer confidence improved slightly, but it missed expectations. And the labor market perception underneath was not great. More consumers said jobs are hard to get, which tells us there's still some tension under the surface. And the Chicago PMI cooled from last month, but it still stayed in expansion territory and came in a bit better than expected. So the macro message today was not perfectly dovish. It was not the economy's collapsing and the Fed needs to cut aggressively. It was more like the economy is still hanging in there and the labor market still is resilient. And because of that, yields moved higher. And that's why TLT is down today, even though the stock market is up. So now let's look at the indices. So, like I said, I'm doing this about an hour before close. So these prices may change. But right now, SPY is trading around 746, 747. So up about 8.8% there. The QQQ, on the other hand, is outperforming yet again at 1.7% up. It's at 736 right now. And the IWM is up 0.52%. So we got a broader risk than we have some of the other days the QQQ was outperforming. The Dow was flat to slightly up at 0.18% up. And TLT, like I mentioned, came down quite a bit here, down 0.78%. So the key takeaway from the indices, if we look at them broadly like this, is that QQQ is leading by a lot. The SPY is strong, small caps are positive, but the Dow is barely up and bonds are down. And that's a very specific type of market. It tells us that investors are willing to buy AI, semis, and large cap tech, but the move is not being confirmed equally by every area of the market. And a lot of the reason for today's move is quarter end strength, continued AI and tech momentum, and investors trying to position into the second half of the year. But the macro data is making the move more complicated because hotter job openings and higher yields are usually not the easiest backdrop for long duration growth stocks. All right, so now let's jump into the sectors. And as I said, this is an hour before close, so these are going to change here a little bit. But technology was up 2.5% almost, industrials 1.5%, basic materials 0.68%, financials were basically flat. Consumer cyclical was also basically flat. Energy was down a little bit. Communications was down a little bit more. Healthcare, we started to get down a bit more at 0.58%. Utilities 0.64%. Consumer defensives -1%, and real estate down -1.23%. So again, the tape is pretty clear. Technology is doing almost all of the heavy lifting. Industrials are also strong, but after that, the breadth gets much weaker. Staples are down harder. Real estate is down even more. Healthcare is down. Utilities are down. Financials are slightly red. Communication services red. So that means that the headline indices look better than the average stock feels today, especially if you are a bit more diversified. And that matters because, or if you're not diversified and you're concentrated in some of these more defensive sectors, and that matters because if the rally is going to have legs, we eventually want to see the breadth improve. It doesn't mean that the rally has to fail immediately, but it does mean we should respect the fact that this still has a leadership-driven market feel to it, not a broad market melt-up. And in fact, let me also mention SMH because we need to put that into the sectors these days, and it is reclaiming some of those levels. We're back in a daily uptrend there, and we were actually kind of worried about it because on the weekly we had this bearish engulfing right here. We gapped up and then engulfed the entire thing. So if we are able to take that out, that will be very interesting. If we're not, this is where I'm really looking for resistance to happen and also a real pivot in the market. But we would really need to see some rotation into some other sectors there if we would like to see the SPY continue its trend upwards. All right, so let's jump into the stock stories of the day. And the first one was AeroVironment, AVAV. It was one of the biggest movers after a really strong earnings report, with the stock surging more than 30% at one point during the day. We're down a bit more, but still quite an upside surprise at 18.5% to the upside. And that's a defense and drone story. And it ties directly into the broader theme that modern warfare, Ukraine, Iran, and drone demand are changing the way investors look at defense technology. And the next story is a story that hasn't quite happened yet, but everybody's watching, which is Nike, because Nike reports earnings after the close today. And the stock's been under pressure near multi-year lows, and the market's watching to see whether Nike's turnaround is actually starting to work or whether the company is still dealing with weak demand, margin pressure, and brand fatigue. The next story to cover, and we'll be covering Amazon a bit deeper today because a viewer requested it for the technical section. And Amazon announced a $1 billion push to build a forward deployed engineer organization inside AWS, basically borrowing a page from Palantir's playbook. And the idea is to send engineers directly into customer environments to accelerate AI adoption. And that's a real AI monetization story. So for the broader market as well, even though the Amazon stock itself is not really acting like a leader today. And the fourth story, and we're also going to cover this in the technical section later, is Uber. Uber's getting hit today after more taxi related concerns, specifically around Waymo and Phoenix. And I think we have a little story here. On Thinkorswim, you can actually read these stories here. But essentially, the fear is that autonomous ride hailing becomes more competitive, and Uber's long-term platform economics could get pressured, especially if Waymo and Uber are ending relationships. And so that's why Uber is trading much worse than the broader market today. So today's stock stories are not just tech is up, they are defensive tech strength, Nike earnings risk, Amazon trying to copy the Palantir AI deployment model, and Uber dealing with robotaxi headline pressure. All right, now let's look at the weekly, daily, and 4 hour on the SPY to understand where we might be going tomorrow. So we'll start with the weekly, just to give us a point of reference. So we're still technically in an uptrend. However, I'm now seeing that we're starting to consolidate in this upper range, and that shouldn't be new to anybody. But we're starting to feel a bit like a downtrend. And the reason that feels that way is because if you look at it on the daily, we are technically in a bit of a downtrend there. Although we're making an attempt to change that. Some people would say this is actually not a trend and that we're just chopping and we're range bound. And I could see that read as well. However, that's not an uptrend. But when we look at it on the daily, the big thing here is that we closed above yesterday's highs. And so that's really important. We also closed this gap here. It's been touched a number of times, but now we're closing it by going through it, which I really like. But the other thing is being above this 20 simple moving average. However, I would like to see us have a red candle above the 20 simple moving average followed by a green candle. And then I'll know that we are firmly above that, or at least I'll feel better that the probabilities are now that we're trading above the 20 simple moving average on the daily, as well as the 50 and the 200. So my moving average stack will now all be in the correct order and we're trading above it. So that's really important here. Also, we're about 40 minutes from the close and we're at the highs of the day. And I mentioned this yesterday that when you're closing near the highs of the day, it's very constructive and it often indicates that there's a higher potential of upside continuation in the next day. Now let's jump down to the 4 hour chart here. And everything looks relatively constructive. However, I want to see us get out of this 4 hour downtrend because you are feeling that on the daily. And even when we went back to the weekly, you're really going to want to get above strongly last week's close. I do have this reversal signal being triggered up here. I think in the long term, the SPY is likely to continue up to the 800 because I've seen it on the GEX. But in the near term, I'm not quite as sure. And remember, this week has a lot of macroeconomic data still. So you never really know what's going on with that. And so on that point, let's jump into the biggest part of the forecast this week, which is the macro, because it's a huge data week and it's still compressed because of that July 4th holiday. And today, we already talked about the data a little bit, but JOLTS came in stronger than expected. Consumer confidence improved only slightly, and Chicago PMI stayed in expansion. And that helped confirm the economy is not falling apart, but it also pushed yields higher. And tomorrow, Wednesday, we get ADP private payrolls, final manufacturing PMI, ISM manufacturing, construction spending, auto sales, and a speech from Fed Chair Kevin Warsh. And the two I care about most are ADP and ISM. ADP is not perfect, but it gives the market a preview before the official jobs report. If ADP is hot, yields could move higher again. If it's soft, the market may start pricing in a cooler labor market before Thursday. And so you can see how it's hard to do some of the positioning based on it. You can mark out all of your levels and understand where it may be going, but you have to understand how it's getting there based on some of the market data. ISM manufacturing also matters because it tells us whether the industrial side of the economy is expanding or slowing. If ISM is strong and prices paid are hot, that could be a more difficult setup for bonds and growth stocks. If ISM cools without looking recessionary, that could be more market friendly. And then on Thursday is the real big event, the June jobs report at 8:30 a.m. Eastern. And that report gives us non-farm payrolls, the unemployment rate, and the wage growth. And we also get weekly jobless claims and factory orders. And that's the number that can move everything. Yields, TLT, the dollar SPY, QQQ, and especially the high duration duration growth names. So for the rest of the week, the market is basically asking one question: is the economy strong enough to support earnings, but not so hot the Fed has to stay restrictive or become more hawkish? That's the balance. Strong but not too strong is bullish. Soft but orderly can still be okay if it brings yields down. But hot labor data plus sticky wage growth is probably the hardest setup for tech, software, and other rate sensitive trades. So tomorrow and Thursday matter quite a bit. So now let's check in on some individual names. I've been getting some requests, and we're going to cover Meta, Microsoft, ServiceNow, CRM or Salesforce, Uber, NVDA, Amazon, and American Airlines today. And so we'll start with Meta. And the one thing I want to show is that SMH is driving most of the gains in the QQQ. So it's not surprising that Microsoft and Meta are underperforming. And it's important to keep that in mind because when we see down days on some of them, it doesn't necessarily mean what you think it would mean because that's not the benchmark we should be judging them against for their relative performance. So I'm just going to put that out there because there are some interesting things forming on the chart. And so the first one is Meta. So Meta is trading down today, but it's only down 0.2%. And what I really like about it here from a technical perspective, and we've talked about this chart quite a bit, I don't see any bullish divergence on the daily. The RSI is following price for the most part. We did see it previously when we saw this low during March into April. And so we've been watching that as a point of reference. And the chart isn't incredibly strong, but from a fundamental standpoint, personally, we're invested in it because we think it is undervalued and we see potential, a lot of upside. We've done some videos on it, so I'm not going to get into that. But on the daily, what I really like today is that we filled this gap here. It was a small gap, a very small gap, but it was also a relatively unexplored area right around a fib. So we were watching that very closely. And something to notice is how these gaps get filled. So when gaps get filled to the downside with these heavy red bars and push right through it, you could see that we didn't have continuation to the upside thereafter. However, what happened here was once we gapped up on the previous day, we came down, filled the gap, and now we're closing to the upside. So what that says to me was when that gap was addressed, buyers stepped in there and we're still around this 78.6 fib. So I really do like that as a potential swing trade. And also if we break that down onto some of the smaller time frames, I believe I saw it on the hourly today. Yes, there we go. So we've been talking about super trends changing. And when I start to see these oscillate and become more closer and tighter after I believe we had months of maybe 2 months of less breaking of the downtrend, I start to pay attention, especially when we start to get above these trend lines here. And so I only really like trend lines on the sometimes I'll look on the 15, but specifically I'm looking on the 1 hour or above. And then I'll start to be looking for other reversal signals if that's what I'm trading, like large engulfing candles starting to happen, gap ups that are filled and then reversed. Because to me, what this says, and you can see it right here, this is like a 2-day gap fill reversal. And I love that. And now we're breaking above this trend line. So to me, there's a compelling swing trade. I've actually bought some more call options today on that. Again, don't just buy things because you see people on YouTube saying it. You don't know my risk tolerance, where I'm going to exit, how many I have. But I did put on another position there. So I like the pattern there today. This can continue lower for sure. So definitely keep that in mind. And it's a choppy week, but I liked this relative unperformance, meaning that it didn't underperform nearly as much as I would have expected today, given the trend there. However, what I also want to see is a change on the 4 hour. And we'll talk about this. We'll talk about this in a variety of names. But just because we reclaimed the 1 hour, what I'm looking for next is the 4 hour is the real tell. So I'm watching that very closely. I do see some interesting divergence here on the RSI on the 4 hour, meaning the RSI is staying relatively the same. It's not necessarily getting weaker, even though we're down here. And I'm going to start seeing some interest. We did see reversal patterns around here, and now we're getting bought up around here. So this is a pretty good risk reward. And the last thing to mention about Meta was the GEX. So we didn't cover it really, but there's been a lot of positive GEX forming. So at 570, we're seeing it. And we're also seeing a nice support below. I mean, it's not a put wall or anything, but the GEX flip line is quite a bit below. And this was taken around 12 o'clock. I can update this and we'll see. But this is expiring at the end of the week at 7:01. So we have to reposition thereafter. But we're also seeing a lot of new activity come in at the 750 strike, which to us says there is a lot of interest later in the year or next year, really. So the next one we're going to jump into is Microsoft. And Microsoft is one we've been watching very closely on this channel. And let's see how we were doing today. So it's up more than Meta, but you can see, at least on the 4 hour, we're starting to doji out there. There's indecision at this level. And I'm not surprised again, because on days where the QQQ is outperforming, people are going into semis and other AI growth tech. And when rates are having a problem, long term software plays like this that are essentially trading based on those future cash flows are going to have a harder time recovering. However, we have been watching this for a reversal around here. And what I like today, you could see it yesterday, is that yesterday we came into this 1 hour uptrend on the super trend and we haven't lost it. Not only that, if we look at this on today's, this S1, sorry, this pivot point right here, this is right in the middle, it's holding it. And we talked about this a few days ago. Once you start to see that, where price is staying above, essentially above support. You know, these S1s and S2 are the lower support levels, the R levels are the resistance, but we're staying above the first level there of the pivot point. And so I really do like that quite a bit, and I'm watching it very closely. I do want to see this reclaim on the 4 hour. That'd be relatively important to us. And it hasn't done that yet. We are getting indecision here. But also, if you notice on the 15-minute, which I don't cover a whole lot, we're starting to reclaim this 200 simple moving average on the 15. And so I could expect a flush down below that to catch everybody off guard, sweep some of this liquidity. But this is the first constructive sign to me that maybe the trade is starting to turn around on a bit of a longer term. However, we've mentioned it before, that what we like to see is we like to see the 200 simple moving average start to flatten out, because it's hard to reclaim it when it hasn't flattened out. I think that's one of the reasons it really did get rejected around here. Whether that's the reason or not, it's telling. And so I would like to see this start to flatten out, which means this is going to play out over a few days. There's a lot of levels to reclaim here. But once we leave all these people down here trapped in those trades, we can probably start to see some of them take off their positions or start to add to their positions if they're going long. So Microsoft is actually constructive to me today. It's up 0.78%, but it feels even better than that because some of the local technicals. However, this is an inner bar here, so it's not exactly a show of strength, but we're watching it very closely for tomorrow. And then if we look at the GEX levels on here, we saw a lot of positive GEX come in today, which gave us a lot of conviction in the upside here. So for the rest of the week, we were looking at 375 as an upside, but if it blasts through that, 385 isn't the craziest thing. And on the channel we covered, there was a lot of whales up there at 380 up to 383, 85. So that's not odd. And if we look at it more long term here, the 500 strike is something that we've been watching for a very long time. And I've also been clear, I've sold a lot of cash secured puts down here at 360 with a $10 premium, so 350 cost basis. And that's how I'm thinking about this to the downside. And I'd be willing to buy a couple more hundred shares down there. So that's all for Meta today. Or sorry, Microsoft today. So now let's look at ServiceNow. ServiceNow is doing something interesting. Likewise, it is down on the day, but if we look at it on the daily, I'm liking some of the things that I'm seeing. First of all, same thing where we have, let me see if I can zoom in here. We're filling this gap, but buyers stepped in here. So that's really good. It gapped down into it as opposed to opening, flushing, and then coming down. So you have a solid body bar there as opposed to a wick below like you saw on Meta. But I still am liking that. However, I don't like this wick here pushing us down off of this. This, I believe, is the 50 exponential moving average. So it's on the daily. So it's a little bit faster, and price does tend to respect that to some degree. It's not my main indication, but when I see big wicks off of it like that, I can usually tell that institutions are trying to offload at those points. The same thing that often happens on VWAP. Those are some algorithmic selling programs that run along the EMA on the 50. It happens more on the 15. So just a little tidbit of algorithmic trading there. And let me know if you guys want to see more of that. I do. That's how I trade a lot of my own book. But I'm happy to cover some of that stuff for everybody. But what I like about ServiceNow is that on the 4 hour, I believe, yes, it finally stepped into its 4 hour super trend. And so this is a lot harder to do than the 1 hour, obviously. And so this was one of the first software names we saw doing that. So we're watching it very closely. It has reclaimed this fib right here, which I think is really important to talk about, because we've talked about this before. When you lose the 78.6 fib, it's not uncommon to have a full retracement, like something like we saw on Bitcoin, which was unfortunate. We're going to cover that one today because I feel like people weren't as interested, but let me know because I am starting to see some recovery after that dip last night into today. But on ServiceNow, it's held that fib. So I really like the look of that. What I do want to see is a reclaim of the 200, obviously, for starting on the 4 hour, and then, of course, the daily, but we're way off on that. This is starting to look like it may flatten out a little bit faster than Microsoft's does. And then if we look at the GEX there, on where we're pod 3 here, we see a lot of positive GEX accumulating at 103 and 105. I'm liking the 105 target, but I wouldn't be surprised if we just hit the 100 and chill there for a little bit. I think there needs to be some catalyst to occur here, but I was seeing negative GEX on this previously, and that's still not happening. I have an upside target of 150 in the near term, but I could see this overshooting some of those GEX targets for sure. I mean, if you look at it just on the monthly there, the all-time high was 239, and we're trading at $99 right now. So I like the risk reward here for sure. So the next trade to look at is Salesforce. So if we go to CRM here and we'll pull that down to the daily to start with, we could see something similar to CRM to ServiceNow. However, there wasn't quite a gap fill there. So this is just accumulation down here in this lower range. Unlike ServiceNow, we did not hold that fib. However, I might want to redraw some of these fibs at this point. Just to recalibrate. There's been a lot of damage done here. This is another name where I think there's going to have to be a catalyst to really drive this higher. So we're waiting for earnings that are going to be starting to come out for some of these names in July. And so that should be really interesting to see. But, this is just software underperformance on the day. Salesforce isn't collapsing, but when tech is strong and CRM is red, you have to respect what's going on there. And it's that everybody's going into SMH today and money is not rotating in there. However, what I do like about that is you could see what ended up happening last week where we're rotating between those days. So I'm not cutting positions, but on days like this, I'm often adding to those underperformers. And like I said, Microsoft I was adding to today, and Meta I was adding to today, because my thesis is that software was taking a back seat while everybody was look at AMD today, for example. That hit new all-time highs, entered a new super trend cycle up there. It's what's driving SMH higher, even though SMH I don't think was able to pull above that weekly yet. So we're watching that closely, whereas AMD absolutely did. But anyway, back to CRM, you have to respect what's going on from a well, you don't have to respect it, but it's best to be aware of it, I suppose. It really needs to reclaim this 160 for me. And I think it's possible tomorrow if you look at the first and second resistance lines there. Also, if you look on the 4 hour, we've finally gotten above the 20 SMA. So I do like that. However, it's not uncommon for the first time it crosses above to come back below. People are trading these levels. Institutions are using them as risk regime filters. So a lot of stuff happens around there, just to be careful about that. But I do like what happened. This is something I look for often where you get a red above it, we come back down and stay above it on a green candle. That to me says that level is holding and buyers are interested above there. So that's very important for me. And then if we look at the GEX on CRM, um, so we have a lot of positive GEX forming at 162, 165. This is probably a misread here where you have all this negative GEX at 170. Let me update that and to see if anything changes. Towards the end of the day, you start to get some crazy repositioning on some of these. So we just need to see if that, okay, here we go. So that was just a little funky read there. But we're still seeing 162 to 165 there, which is really interesting. And then later in the year, there is an upside target here of 200. So that is consistent with the way I've been thinking about it. I've been adding to CRMG. I have a few calls on this. Again, not financial advice. I did add some more to CRMG today. I'm liking this pattern, but again, it's kind of an inside bar day, especially right after this huge indecision candle. But again, that wasn't odd to me. I like this indecision candle happening at the 20 SMA on the daily. So now let's jump into the next trade. All right, now let's look at Uber because they we covered it briefly in the news, and they took a big hit today because Waymo and Uber ended their pilot partnership in Phoenix. But I would have expected actually more of a pullback. I know it feels like a lot if you're heavily invested in Uber. A 4.2 or 4.7% negative day here isn't great, but we're still in technically a super uptrend on the daily. But essentially, if you look at this a little bit larger, we're just in consolidation. It's really weekly consolidation. If we go to the weekly here, you can see we've been consolidating around this level. And I have these fib retracements, which are actually kind of funny here because they're the reverse ones. It's actually a fib extension essentially. So from here to this move, and we're seeing where we're going, and we are kind of cycling around the 78.6. So don't get this confused with what I said earlier that if you lose the 78.6, it retraces to zero, because this is kind of the opposite here. This is to see how far we could fall. And I would actually expect some support coming up around the 200 simple moving average on the weekly here, which is at 63, 65. But I think it's going to come up higher to around 70, and we're going to find it. And I'll show you the reason why. Because on the daily, and we'll look at the GEX, I would have expected a bigger fall, but we haven't actually lost the positive GEX here. So we haven't gone below the gamma flip line. The gamma flip line is at 70. And also we can see at later expirations that we're seeing a big put wall here at 70. And what's interesting to me about that is that generally acts as some type of support. And if we kind of triangulate that, it's not truly mathematical, but if we look at it on the weekly, the simple moving average isn't too far off from where it could meet it at 70, maybe 68, something like that. Even 67 looks okay for us. And if we fell to 65, I think I would start picking up some long-term shares, but I probably would exit some of my near-term swing trades. So the next name to talk about is NVIDIA. Thank you to the user who asked. I really appreciate that, all the comments. While we're starting to talk, let me update the GEX here because it's getting close to the end of the trading session. But let's look at it on the daily. So yesterday, it popped off the 200 simple moving average, and that is compelling in general, but I don't tend to trade those unless they go into an uptrend. So let's look at the last time it touched the 200 SMA here. It popped off and it actually looked relatively similar to what we're seeing today, but it never got back above. Whereas here, it got above on a red candle, which I love. A green candle stayed above. We talked about that, and then the trend continuation happened. But we are now in a daily uptrend there. So I want to see a daily uptrend off of the 200 SMA. Otherwise, I tend to think that there's either going to be some consolidation around there, or maybe it's going to start going fishing below it to see if there's really institutional interest down there. And the interesting part about that is if everybody's been rotating to other semi names. Oops, I wanted AMD, not ADM. It is going to be a tougher story for NVIDIA. I think NVIDIA just, talking about sentiment, people are happy to hold, but may not be aggressively buying there. I mean, this is such a huge stock. The market cap is so big. To get this to move the same way some of the other semis are moving would be a lot harder, and I think some of the profit taking here may be to go into those other semis. Again, I can't speculate on the positioning. I mean, I can't tell you for sure in the positioning, that's speculation, but it is an interesting read there. However, I would think that this would start to hold better when semis go down. So I've also been going into a pairs trade. Haven't done it yet, but I've started building out. So stocks I use as a hedge. So it's down a whole lot here. I take profits on green days depending on performance, but this is like a 3-year hedge for me personally. But soon I'll probably be adding NVIDIA against it as a pairs trade when it starts to look compelling for me. But that's just something to think about because of the way it's been performing against its own sector. So let's look at the GEX on that real quick. So it looks like the 200 strike level has a whole lot of calls there. It's a call wall, essentially, is what you would call it. And what happens there is that it gets dampened. The market makers dampen it when it comes up into that level. So basically, as NVIDIA hits 200, you'd expect to see some relegation of this momentum. And that's another reason it might be hard to reclaim some of these moving averages. And also, you may have noticed that the 20 crossed below the 50 here. So to me, I do see more likely downside on it, but I'm not actually swing trading that. However, if we come down, I'll start be looking for cash secured puts if NVIDIA comes down to 160, 170. I would love to pick up some more shares down there. It would be kind of a wild situation for me to see it down there, especially when we look at the GEX later on and there's more strikes formulating at the 225, even the 250, which is what I think it's probably worth based on valuation. All right, so the next one is American Airlines because we've been talking about this. So it's getting really close to carrying out that weekly pattern that we really like, which is one, it broke above this trend line that we've been watching. But right here, we're about to get the cross right here of this 50 going above the 200, which would be really amazing. And in fact, you could see that all of the moving averages are getting very close to a pinch point here. So I do love that. I was in this trade. I've since come out of it, but I have some orders waiting. If we come down to 16 and a half, I'll be picking up some long-term shares, selling some cash secured puts, and I'll probably be buying some leaps because right now the premium has gotten jacked by this move, but it's still a relatively inexpensive leap to be playing because the types of moves it's had historically have been low. And if you look at it here on the monthly, what I really love about this is again, the RSI has been getting stronger, or you could think of it as getting less weak, but the price is not going down. So it's not the same kind of divergence we're always looking for where you're making lowers, but where you're making equal lows for the most part, and RSI is improving like that, it's a really good sign. And you can see that we've gone into a monthly super trend if this holds. So we'll know tomorrow if that's holding. And I tend to wait until it truly closes to go in long. But I do like this for some upside, but we're going to have to watch the rest of the economic data to really get an idea of where it's going. And let's look at the GEX here. So 18 is likely where, and that's one of the reasons we got out. We got out around 17. We just started seeing this happening. And so it's going to take a while. This is the strike to 2028, so 12, 15. So we got a long time for that. But for it to get up to 20 by then isn't odd. I just want to make sure that I'm paying the appropriate premium and that it's not jacked up and you're getting appropriate leverage. So we can cover that in a future video. If you guys want to see stuff about how to choose options leverage, let me know. That'd be really interesting. And I'm also noticing, because I'm doing this live, that SPY is starting to have a little bit of a cool off towards the end of the day. Not surprising. We're up here at R2. So not weird. I wouldn't be surprised if we fall back down to 245. All right, and the last one to cover is Amazon. And so Amazon's looking a little bit like NVIDIA to me as far as being around the 200 SMA on the daily and also being in a daily downtrend and not being able to reclaim the 20 simple moving average and having 20 cross below the 50. So there's a lot of stuff I don't like about what's going on here. However, I do think there could be consolidation for a long time because if you look back historically, there was a lot of consolidation around here. We broke out, we've come back to retest it. We've overshot the retest depending on where you see the breakout happening because if you look back even further, and I'll have to go to the weekly for this, the breakout might actually be a little bit lower than everybody thinks. Everybody thought the breakout was here. We came below it. We couldn't come back above. So it's a failed breakout retest. And so I would start looking at the next levels there. And 220 is looking compelling, but I wouldn't be surprised if we came back down to 200. Personally, I'm in it for cash secured puts at 220 with a $10 cost basis, or a premium. So my cost basis is $210, and I would scale in if it comes lower because I do like this. But I'm always looking at the weekly 200 SMA. How would I feel if it fell to there? So by the time it fell to there, if it was somewhat orderly, not a black swan, maybe we'd be about another week or two away around the 200. So I probably wouldn't feel that bad about owning Amazon at the 200. And now let's look at the GEX. I know I'm doing Amazon very briefly. Let me know if you guys want to see more on that. But the GEX is growing at the 250. So I do like that a lot, but I want to see it prove itself. For me. However, 250, if you look at it, that we were there earlier this week. And we certainly could reclaim that. This could be a little bit of a fake out during the week. And we do have this nice reversal pattern down here. I really love this candle here. This is another one of those morning stars, even though we came out of it from consolidation. It's one of those morning stars that is real because when we came back to test it, we came down to basically the top of that candle, and then we've continued back up. That doesn't mean it will hold in the long term, but there are some types of basing patterns happening here, so it wouldn't be the craziest thing. However, the point I'm going to make about that, besides just telling you, oh, I think it could fall below the 200, oh, maybe it'll go back up above the 20, my point is from here to 250 isn't enough for me. $12 for this type of choppy action is not a plus setup for me personally. So like I said, I'm selling cash secured puts below it. Right, guys. So that was a whole lot of technical analysis. Sorry, it was unscripted. I like to do those just by looking at the charts together with you. And let me know if there's anything else you want me to show you. In those, I've started to integrate the GEX because that's actually what I'm looking at. And a lot of my algorithms are running based on that GEX and pivot points. Um, but huge thank you to everybody who subscribed, commented, and liked. It really means the world to me. And if you haven't subscribed, please, please, I'd really appreciate that. It's why I make these videos, especially during market hours. I do regular market recaps, new trade setups over the course of the week, and some really deep technical dives on the weekend. So thanks so much. Happy investing and stay safe out there.